Looking at economic data can sometimes really bring you down. You glance at a few charts and think, something isn't right, but what exactly? That's exactly how it feels. When we look at the last 50 years, one thing becomes clear. Wages appear to be rising, but in reality, they have fallen far behind economic productivity. In other words, we're working more, producing more, but we're not getting the same return as before. Housing, on the other hand, is no longer primarily about shelter. It has turned into a financial asset bought for investment. Saving money? Much harder than it used to be. The prices of everyday consumer goods have moved ahead of earnings. And here's the strange part. It's not the real economy that's driving things. It's finance, banks, funds, stock markets. The financial sector has become larger than actual production. Global debt levels have reached unsustainable points. Inequality breaks a new record every single year. In the United States, for the first time in history, the richest 0.1% control more wealth than the entire bottom 90% of the country. Think about that. Elon Musk alone has become the richest individual in human history. So let's take a step back and look at this. Debt is rising, inequality is rising, buying a home is getting harder, wages are stagnating, and finance is overtaking everything. Any one of these would be bad on its own, but all of them worsening at the same time in the same direction? Isn't that a bit much? History has shown us this again and again. Periods like this usually don't end well. But here's the most interesting part. If you look closely, or even if you just read the title of this video, you'll notice that most of these problems began accelerating around the same years, almost as if someone flipped a switch. And the year that switch was flipped, 1971. So what happened in 1971 that the global economy was never the same afterward? And more importantly, does everything we're experiencing today really trace back to that moment?
During a period when we were watching markets deteriorate, I instructed Treasury Secretary Connolly to temporarily suspend the convertibility of the dollar into gold or other reserve assets. The moment this sentence was spoken, the markets paused and took a breath. And then the Dow Jones fell by roughly 18%. At the same time, gasoline prices were rising, housing prices were falling, and unemployment was increasing. So for ordinary people, the picture was already difficult. And then the very foundation of the system was shaken. What do you do in moments like that? Do you wait? Do you run? Or do you look for opportunities? You have to keep yourself away from losses. You choose opportunities, and if that opportunity isn't worth it, you move on and wait for another one. But that's easy to say, because the stock market was already down 21% at that point. And when the calendar hit August 15, 1971, then U.S. President Richard Nixon announced that the convertibility of American money into gold would be suspended temporarily. Technically, it was just a decision, but in reality, the final nail was driven into the coffin of the gold standard. That temporary decision was never reversed. I suppose Nixon had other problems. I am not a crook. I have earned everything I have. Looking back today, this announcement in particular is seen as one of the most critical turning points in modern economic history. For some, it marks the line that splits capitalism's golden age in two. Before it, a single income could buy a suburban home, a car, and support a stay-at-home spouse. After it, life became a little harder year by year. And today, we often hear that phrase, "You will own nothing and be happy." This narrative sounds very convincing because it aligns neatly with the idea that money is no longer real. After all, there's nothing physical backing it anymore, right? But the truth is, it's not that simple. For many viewers watching from the United States, this is important to know. Compared to before 1971, you actually have more freedom today to hold gold as a store of value. So the system changed, just not in the way most people think. More importantly, in the 1970s, it wasn't only the monetary system that changed. The structure of production, globalization, energy markets, population growth, women entering the workforce, the rise of finance, all of these shifted at the same time. Looking only at the gold standard causes us to miss many issues that some people would probably prefer to keep out of the conversation. So the real question is this: if abandoning the gold standard truly broke so many things, why did we do it? And perhaps the more uncomfortable question, if going back is such a good idea, why haven't we? That's exactly what we're going to talk about in this video.
The reason the United States initially removed the dollar's convertibility into gold is actually not as mysterious as we tend to think. I'll say it plainly: to trip up the French. Yes, it sounds a bit harsh, but that is exactly what history tells us. After the Second World War, the major countries came together and agreed on a simple idea. If countries became financially and commercially dependent on one another, would the likelihood of going to war again decrease? Their answer? Most likely yes. This idea was put into practice at the famous conference held in Bretton Woods, New Hampshire, at the Mount Washington Hotel. For economists, it was almost like a Woodstock. Everyone who was anyone was there, and in just 3 weeks, representatives from 44 countries laid the foundations of the IMF, the World Bank, and the predecessors of the World Trade Organization. As if that weren't enough, they also decided that GDP would become the standard way to measure national economies. It's said they even managed to squeeze in plenty of golf along the way. Impressive. But that wasn't the biggest issue. The Bretton Woods Agreement stated the following: countries would peg their currencies to the US dollar, and the US dollar would be pegged to a specific amount of gold. Sounds solid, right? But there was a small detail. Only central banks could make that conversion. American citizens were not allowed to hold gold. That's because in 1933, the United States had required the public to hand over nearly all of the gold they owned to the government in exchange for a fixed price. In other words, the only major player allowed to hold gold in this system was Uncle Sam. And thanks to this massive gold stockpile, other countries believed one thing: if we want to, we can always convert our dollars into gold. So was this a full-fledged gold standard? Not really. It was more of an accounting system operating between central banks. But it worked because it made global trade incredibly easy. With the rise of standardized shipping containers, countries could now trade without constantly worrying about how valuable different currencies really were. Today, that sounds normal. We check exchange rates on our phones and move on. But back then, this was revolutionary. In the 1930s, international trade was pure chaos. Bretton Woods cleared that chaos away, and global trade exploded. But over time, something became clear. The United States was doing pretty well out of this deal. Actually, very well. How so? In theory, the dollar could be converted into gold. In practice, that right was almost never used. The result, the US could buy $100 worth of goods from other countries with a piece of paper that cost only a few cents to print. France's president at the time, Charles de Gaulle, gave this a name: exorbitant privilege. And he decided to test the bluff. He began converting France's dollar holdings into actual gold. His successor, President Pompidou, took it one step further and sent a warship to New York Harbor to collect the gold owed to France. That's when the problem became impossible to ignore. The amount of dollars in circulation far exceeded the gold reserves the United States could convert them into. Within about 10 years, the US burned through roughly half of its gold reserves. And finally, on August 15, 1971, Nixon went on television and delivered his famous speech. The tap was turned off, the game was stopped. So the real question is this: was this system always destined to end this way? Or if no one had called the bluff, could it have gone on a little longer?
The video will continue. In the next video, we will go deeper into the topic. Until then, take care of yourselves. On the Money Files, we talk about the reasons. Don't forget to subscribe and like.